What if you invested £100 every single week in passive funds and at the same time tried to beat the market by picking up your own stocks for the same £100? 4 weeks into the experiment, and there is already a gap. Active is up 1.85%, whereas passive is up only 1.2%. Real money, real difference after 1 month. This is month one update. Let's get into it. This is a personal educational experiment, not a financial advice. Please do your own research. Now that we've got that out of the way, let's see exactly how the experiment works. Here's the experiment in its simplest form. £200 gets invested every week. £100 goes into a passive global ETF and another £100 goes into an actively selected stock. Both portfolios are held inside a stocks and shares ISA in Trading 212. We started on 27th July 2026, and by week 4, the passive portfolio is up 1.20%, while the active portfolio is up 1.85%. Active is ahead, but the real question is not who is winning, but whether the experiment is run properly. If you'd like to know more about the rules of this experiment, please check out the intro video link in the description. Let's put that first month result into the wider market context. As you can see, both the portfolios are publicly available in Trading 212 as two different pies. If you compare, there is a difference of just a few pounds in the portfolio value, but it gives us a starting scoreboard for the experiment. Now let's break down exactly where those numbers came from. First up, the boring portfolio. And boring might actually be the whole point. The passive strategy is not trying to find the next big winner. There is no stock picking, no market timing, and no decision about when to sell. After £400 purchases in the ticker ACWI, I have invested a total amount of £400 and got a 1.2% return. No dividends have been received yet. So the passive portfolio is up, but more importantly, the process has stayed exactly the same every single week. And now let's get to the active portfolio where I actually have to make decisions. Now for the active portfolio, that has a potential to make me look very clever or very foolish. With active investing, I'm making individual company choices, which means there is more potential upside, but it's also more ways to get it wrong. The rule here is one new company every week from my shortlist. The intention is to hold for the long term and only sell if the valuation changes significantly or the original investment thesis breaks. The 4 purchases were Adobe, Man Group, Novo Nordisk, and Rocket Lab. £400 was invested in total, and the portfolio finished with a 1.85% gain at the end of month 1. But remember, there is also 45 pence of FX fees. Now let's look at exactly what I bought and more importantly, why I bought. 4 weeks, 4 companies, and every purchase had a different reason behind it. If you're going to pick individual stocks, simply saying, I think this company will go up is not enough. You need to know what attracted you to the company and what would make you to sell the company. That's why each purchase has both a reason for buying and an exit criteria on why I might sell the company. I bought Adobe as it was in my circle of competence and it has an amazing free cash flow and moat. I did a detailed analysis on Adobe in this video, which you can find the link in the description. I bought Man Group based on its algorithmic trading and technology angle. Novo Nordisk was based around free cash flow and dividends and the demand for obesity drugs globally. And finally, Rocket Lab for its growth story. With the revenue backlog and end-to-end space infrastructure, it was a no-brainer. And each one had a potential reason to sell. From Adobe's perspective, if the buyback plan or the annual recurring revenue keeps changing, to competitive pressure for Novo Nordisk or structural losses and neutron delays at Rocket Lab. So which of these 4 actually carried the portfolio this month? Let's start with the winner. Time of recording, Adobe had surged roughly 25% over the past 4 weeks, rebounding sharply from its 52-week low of 190 US dollars. The recovery was driven by fading AI disruption fears, institutional support, bullish analyst upgrades, and a rotation into the enterprise software. Adobe ended the first month as the biggest winner in this active portfolio. But investing is not just about celebrating the winners. Let's take a look at the losers as well. Novo Nordisk was added only on 10th August 2026. It may not be right to interpret it as a failed investment decision. The stock declined over the past 3 weeks, primarily due to a late stage clinical trial failure, investor disappointment over a lowered growth trajectory despite an earnings rise, and finally, ongoing competitive and pricing pressures in the US weight loss market. Now, that brings us to the most important question. What did I actually learn this month? What did I learn? Never buy a stock without doing your own research and without conviction. Let me give you two examples. First, Airbnb. I bought Airbnb about 1.5 years ago at 147 US dollars. I did not do my own research. I simply read an article and believed the stock will go up. Instead, it fell to 115 US dollars. Since I lacked the conviction, I became desperate to get my money back. When it eventually reached 150 US dollars in the past few weeks, I sold it. Today, as of 21st August 2026, it's around 187 US dollars. Do I regret selling? Yes. But it's not because I sold too early. I regret not doing my own research. If I had understood the company and built the conviction, I probably would not have sold it. Let me give another example with Adobe. I bought Adobe in my pensions portfolio around 6 months ago at roughly 250 US dollars. The stock fell significantly to 190 US dollars. I didn't panic or sell. Why? Because I did my research and believed in the long-term thesis. In fact, I bought Adobe again at 237 US dollars as part of this experiment on 27th July 2026. At the time of recording, Adobe is around 275 US dollars. So the lesson, do not buy a stock because someone else says it will go up. Do your own research, build a conviction, and then have the patience to stick with your thesis. So that's month one update. Active leads, passive portfolio is still positive. Now I want your prediction. Which portfolio will be ahead by month 3? Active or passive? Drop your prediction below. Subscribe for month 2 and I will see you in the next one. Thanks for watching.